Usually when we talk about cancer treatments, the metaphors are pretty brutal. We talk about nuking the tumor with radiation or poisoning it with chemotherapy.
Right. Yeah, it's that scorched earth policy of medicine.
Exactly. It's a war of attrition, where the patient often takes just as much damage as the disease. But imagine a sci-fi scenario where you don't use external weapons at all. Instead, you reprogram the body's own defense system to wake up.
To wake up and get stronger.
Right. And crucially, to remember exactly how to kill the invaders the next time.
That is the dream. And for a long time, it really was just that, a dream. But what we are looking at today suggests we are finally moving past that era of just poisoning tumors. We're moving into an era where we train the body to do the heavy lifting.
So we are doing a deep dive today into a company called Immunity Bio. And if you've been ignoring them because you think they're just another science project burning cash, or maybe you saw the stock chart bounce around and got a bit dizzy, you might want to pull up a chair.
Yeah, you really do. Because they just hit a massive inflection point.
They really did.
Massive is the right word. We are talking about a company that went from generating essentially pocket change to over $100 million in revenue almost overnight.
Which is wild.
It is. They've crossed that valley of death that kills, 90% of biotech startups? That gap between having a cool idea in a lab and actually selling a drug to patients.
But in these deep dives, this growth comes with a very messy, very complicated financial picture. We've got high debt, we've got cash burn, and we have a serious race against the clock.
It's the classic high-stakes biotech drama. So our mission today is to unpack three main things for you. The weapon they've built, which is called ANKI-EVA, the sudden explosion in their revenue, and the landmines hiding in their balance sheet.
Let's start with the weapon. The company is Immunity Bio, ticker IBRX, and they focus on immunotherapy. Now, most people listening have heard that word, but I want to get really specific here. How is what they are doing different from, say, the checkpoint inhibitors we see on TV commercials all the time?
That is the million-dollar question. To understand Immunity Bio, you have to understand the difference between the gas pedal and the brake.
Okay. I like analogies. Break that down for me.
So most of the famous immunotherapies right now, drugs like Keytruda, they're called checkpoint inhibitors. Cancer is smart, right? It puts a brake on your immune system so your body can't attack it. Checkpoint inhibitors cut those brake lines. They take the restriction off.
Okay, so the car, meaning the immune system, can finally move.
Exactly. But here's the problem. What if the car has no gas?
Oh.
Right? What if your immune system is just too exhausted or the cells are too depleted to fight, even with the brakes completely off? That is where Immunity Bio comes in. Their approach specifically with their lead drug ANKTIVA is cytokine-based. It is the gas pedal.
It supercharges the engine.
Precisely. They focus on activating what they call the triangle of attack. You have natural killer cells, NK cells, which are your first responders. You have T cells, which are the specialized assassins. And crucially, you have memory T cells.
The memory part is what really caught my eye in the research, because that's the difference between a temporary treatment and a potential cure, right?
It absolutely is. If you can train memory T cells, the immune system doesn't just kill the cancer today. It physically patrols the body looking for it to come back tomorrow. It creates what we call immune competence.
So enter ANKTIVA. Now, the scientific name is a mouthful. It's a nogapendikin alpha inbacicept. I practiced that in the mirror this morning.
You actually nailed it. But let's stick to ANKTIVA for the sake of everyone's sanity.
Please. So technically, this is an IL-15 superagonist. What does that mean in plain English?
IL-15 is a cytokine. It's a signaling protein. Think of it as the rigorous drill sergeant of the immune system. When ANKTIVA enters the body, it binds to the immune cells and does three things. It wakes them up, it tells them to multiply, and it directs them straight to the tumor.
It's building an army.
Exactly. It's not just unmasking the cancer, it is actively building an army to fight it.
Now, they have approval for this, but it's very specific right now. Where are they actually using it in the real world?
Their beachhead, the first place they've landed commercially, is bladder cancer. Specifically, BCG unresponsive non-muscle invasive bladder cancer carcinoma in situ.
That is a very specific slice of the pie. Why start there?
Because of the unmet need. These are patients who have already tried the standard treatment, which is a bacterial therapy called BCG. If BCG fails, the next step for these people is usually removing the bladder entirely.
Wow.
Yeah, it is a life-altering surgery.
Nobody wants that. That changes your quality of life forever.
Right. So ANKTIVA comes in as a savior for those specific patients. It's used in combination with BCG to basically restart the immune attack, and the data has been impressive enough that the FDA gave it the green light.
But here's where the story gets much bigger. If you read their investor decks or listen to management, they keep using this word backbone. They almost seem offended if you think of them as just the bladder cancer company.
Oh yeah, that is way too small for their ambition. The backbone thesis is the core of their entire valuation. They believe ANKTIVA interacts with the immune system in such a fundamental way that it can be the quarterback for almost any cancer treatment.
So you take Anktiva and you pair it with a checkpoint inhibitor or a cell therapy, and suddenly those other drugs work better.
That is the hypothesis. They want to create chemo-free combinations for major solid tumors, lung, colon, pancreatic. If ANKTIVA is the backbone that makes immunotherapy work for everyone, not just a lucky few, then the market isn't hundreds of millions, it's tens of billions.
Which brings us neatly to the numbers. Because potential is one thing, but cash is king. And looking at the chart, 2024 was quiet. And then 2025 happened.
Quiet is generous. In 2022 and 2023, their revenue was basically a rounding error. If we're talking less than $1 million, they were a research lab disguised as a public company.
Then we hit fiscal year 2025. Revenue explodes to approximately $113 million. And just in the fourth quarter alone, they pulled in $38.3 million.
That is the commercial proof of concept. That is the moment the company proves it can actually execute. It means doctors are prescribing it, insurance companies are agreeing to pay for it, and the logistics of getting the drug to patients are actually working.
And the volume growth is absurd. Management cited a 750% increase in unit sales volume in 2025 compared to 2024.
That tells you adoption is accelerating rapidly. It's not just a few curious doctors trying it out once. It is becoming part of the standard of care in that bladder cancer niche.
And it explains the valuation, too. They trade at a massive price-to-sales ratio around 100 times. But the market is pricing in that 400% year-over-year quarterly growth.
Exactly. When you are ramping from near zero, the multiples look insane until the revenue catches up.
So the product is flying off the shelves. But to keep those numbers up, they can't just stay in the U.S. They are going global. I saw the news about the Europe expansion, and it looks like they are taking a very different approach there.
This is a really big deal. They announced a partnership with Accord Healthcare. This opens up 33 countries. The entire EU27 plus places like Iceland, Norway, and Liechtenstein.
Why partner, though? Why not just sell it themselves like they do in the States?
Because launching a drug in Europe is a bureaucratic nightmare. Every single country has its own pricing authority, its own regulations, its own supply chain rules. Immunity Bio is already stretching its resources just in the U.S.
Right, they don't have the bandwidth.
Partnering with Accord, who already has the trucks, the warehouses, the regulatory relationships, it allows them to scale instantly without spending millions building that infrastructure from scratch.
It's a speed play.
It is. They've even set up an Irish subsidiary in Dublin to manage the complex logistics. It shifts them from a single country story to a multi-region rollout.
But speaking of global players, there was another piece of news that I think flew under the radar for a lot of people, but it shocked me when I read it. The Saudi surprise.
Yes. In my opinion, this is actually more significant scientifically than the Europe deal.
Break it down for us. What exactly happened?
Saudi Arabia became the first jurisdiction in the world to authorize ANKTIVA for metastatic non-small cell lung cancer.
Wait, lung cancer, not bladder cancer.
A lung cancer, and specifically authorized for use in combination with checkpoint inhibitors.
This goes right back to that backbone thesis you mentioned earlier.
Bingo. This is the external validation of their big theory. The FDA in the U.S. hasn't approved it for lung cancer yet, but the Saudi regulatory body looked at the clinical data and said, yes, this works.
That has to be a huge confidence booster for them.
It is massive. It proves ANKTIVA isn't a one-trick pony for bladder issues. It validates that it can boost the effectiveness of other drugs in major solid tumors. And from a business side, they view Saudi Arabia and the MENA region, Middle East and North Africa, as a strategic entry point. They plan to launch there within 60 days of the approval.
So the strategy is clear. Prove it in the U.S. with bladder cancer to get cash flow. Prove it in Saudi Arabia with lung cancer to validate the science. Then take that data back to the FDA and the rest of the world.
That is the exact playbook. And if it works, the addressable market goes from a niche to basically everything.
Okay, so we've painted a pretty rosy picture here. Super soldier cells, exploding revenue, global expansion.
Yeah.
But I'm looking at the balance sheet and yikes.
Yeah, it's ugly. We have to ground our excitement in the financial reality here. This company fits the profile of high growth, high debt perfectly.
Let's look at the numbers. They have total assets of about $1.02 billion, but their total liabilities, $1.54 billion. They owe significantly more than they own.
And a huge chunk of that liability is debt and financing obligations. They are heavily leveraging the future to pay for the present.
They do have about $257.8 million in cash and short-term investments sitting in the bank. To a normal person, that sounds like a fortune. But in biotech, that can disappear fast, right?
It all depends on the burn rate. And right now, their operating margins are deeply negative. We are looking at negative 213%.
Wait, negative 213%. So for every dollar they bring in.
For every dollar of revenue, they are spending over $3 to keep the lights on, run the trials, and manufacture the drug. They are bleeding cash to fuel this growth.
So how do they survive? If the overall operation is losing that much money, where does the cash come from to fill the hole?
Well, historically, it has been dilution.
The dreaded D word. Explain that for the listener who maybe owns stocks but doesn't read the SEC filings.
Imagine a pizza. You own one slice. The company needs money, so instead of earning it, they just cut the pizza into smaller and smaller slices to sell more of them. Your individual slice gets smaller.
That is dilution.
Look at their share count history. In 2021, they had about 400 million shares outstanding. By 2025, that number is projected to be nearly 1 billion shares.
Wow. So they basically more than halve the value of an original share just by printing more of them.
That is the cost of independence in biotech. They don't have a big pharma sugar daddy like Pfizer or Merck funding them. They are funding this themselves on the public markets.
It feels like a race. Can they get the revenue from Anketiva scaling fast enough to cover their costs before they have to dilute shareholders so much that the stock tanks?
That is the central gamble. 2026 is the execution year. They don't need to be fully profitable tomorrow, but they need to show that the revenue line is catching up to the expense line. If that gap doesn't close, the debt holders get very nervous.
And you don't want nervous debt holders.
Yes. Never.
So looking ahead to 2026, what are the milestones we need to watch? If you're following this story, what is on the scorecard?
Management hasn't given formal revenue targets, which is annoying but common for companies at this stage. They're telling us to watch run rate momentum. Is each quarter significantly better than the last?
And regulatory-wise?
In the U.S., watch for the label expansion. They are in talks with the FDA. They had a Type B meeting to expand the use of Anketiva to papillary non-muscle invasive bladder cancer. The FDA asked for more info, and ImmunityBio is submitting that within 30 days.
If they get that, the market size grows instantly.
Exactly. More eligible patients means more revenue. They are also planning to submit for accelerated approvals in multiple regulators outside the U.S. throughout 2026. And they want to discuss accelerated pathways for other indications with the FDA, too.
And we can't forget the pipeline. You mentioned earlier that Anketiva is the backbone. What else are they actually testing it with?
They have over 30 active trials across about 10 different tumor types, but the most sci-fi one in the pipeline is combining Anketiva with CAR-NK cells.
CAR-NK. That sounds like a vehicle.
It stands for Chimeric Antigen Receptor Natural Killer Cells. Basically, they engineer killer cells in a lab to specifically target the cancer, inject them into the patient, and then use Anketiva to keep those engineered cells alive and fighting.
It's incredible.
The ultimate dream is a completely chemo-free treatment for difficult cancers. No poison, just engineered biology.
We really are standing on the edge of a shift in how we treat this disease. On one side, the science seems to be winning. The revenue is scaling. The lung cancer data in Saudi Arabia is validated the global rollout is happening. On the other side, the financial gravity of $1.5 billion in liabilities and massive cash burn is trying to pull them down.
That is the perfect summary. ImmunityBio is a classic high-risk, high-reward biotech. They have successfully crossed the valley of death from R&D to commercial sales, going from under $1 million to over $100 million. That is a massive achievement most never reach. But now they have to survive the scaling phase.
They're trying to shift the narrative from being just a bladder cancer company to being the global immunotherapy backbone.
And that Saudi lung cancer approval is the first real tangible step in that direction.
So here's the final provocative thought I want to leave you with. We are seeing a drug that wakes up the immune system and seems to make other drugs work better. If Anketiva truly works as a backbone that enhances checkpoint inhibitors, and if that lung cancer data holds up globally, Are we looking at a future where chemotherapy actually becomes obsolete for certain solid tumors?
It's a completely, entirely new paradigm.
It is, but the immediate question remains, can ImmunityBio survive its own debt load long enough to be the company that gets us there? It is going to be a fascinating year to watch. Thanks for taking this deep dive with us.
Always a pleasure.